Today was a big day today as Powell came out and said he may be slowing down on the rate increases, even starting in December. And that made the market just rip higher. As you can see, we started before the speech right around 39.50, which was our vol trigger, and we exploded higher right to this level of 40.45 as we trade about 45 minutes before the close. Now, if you look at our SpotGamma AM note, this is what we send out to all of our members. We outlined the path of movement that we expected coming out of this data. And if you look very carefully here, we show resistance for the day. Right here at 44.48 was the top end of our resistance for the day. And we said, look, coming out of this event, we did give edge to a significant downside move if Powell spooked the market. We thought vol could spike and that could really drive markets lower. And we said that the key thing here is to note that the opportunity for a strong rally is here, but we're showing like a 5% rally into big 12/16 options expiration, but you could get a much steeper side move if the market read Powell as negative. And so what has happened, as you can see on our chart here, is that we're looking for a roughly 5% overall rally into 12/16, which is the big December OPEX. And so you can see that on this chart here at the bottom, we plotted out the implied probability of what the options market was expecting over various expirations. So each line is a different expiration. And basically what we do is we look at the options prices and we see what the market is pricing in terms of probabilities for various prices. And what you can see is that before Powell, implied volatility is very high, and that gave a pretty decent odds of the market sliding down below 3,800 by 12/16 expiration. That's this pink line. And then conversely, on the upside, there was a little bit of opportunity here for getting up into the 4,200 area, but note any kind of prior or earlier expirations that, there really wasn't much probability signed. And we said, look, the market is probably underestimating the feedback loop that can kick in that can drive prices higher. So if you look at now, this is the updated plot of after Powell spoke, vol came down. Now there's different trader expectations based on what Powell said. And what you can see is that there's no longer any chance, really material chance of the market trading below 3,700. At least that's what the options market is implying. But look at this suddenly now here on this right shoulder, so to speak. Now markets are giving a pretty decent 5% chance, maybe the S&P trading up into 4,200. In particular, again, note some of these shorter dated expirations, like for next week or about 10 days out, that suddenly there's some decent probability of the market trading up into that level. So we think what this is really telling you is that the options market was not pricing in the volatility that could come out of this event. And that is really what the SpotGamma data was showing us. We thought that these feedback loops created by implied vol coming down and traders shifting expectations could really propel volatility. So again, in the short term here, we're getting the market trading up into our key levels, and we think that there could be a strong pause here today, and then tomorrow we're likely to continue higher. However, we're looking for the velocity of this move to start to slow down as the market moves higher. And the main reason for that is that as implied volatility comes down, as the VIX comes down, that is going to be a drag on the S&P prices. And so we expect that the velocity of this move higher is going to settle down. We continue to think that we could trade up into the 4,200 level, but we think that the gains, the quickness of, or the velocity or magnitude of the gains is likely to cool off here as we march forward. And on that topic of volatility, if we turn and look, the VIX is now down really very sharply. We're approaching the 20 level, which has been a low in vol over the last several weeks. But now that Powell may back off a little bit, we do have a PCE tomorrow and then some non-farms payrolls on Friday. And so those data points could add a little bit of confusion to the mix. But basically, we do not expect volatility now to leap higher over the next 2 weeks unless we get a really hot reading in PCE or unemployment that really rocks the boat over the next 2 days. But this key really moment here, again, if we look at VIX term structure, again, this is today's VIX term structure in black versus yesterday's in blue. The whole vol complex now coming down after Powell said that they're going to back off some. And so again, while we do think the market now has a strong tailwind into 12/16 expiration, we do think that the velocity of the returns, how fast the market is rising, is going to cool off a little bit here. And yes, we're going to grind higher, but we are looking again for 4,200 to be that cap into 12/16 expiration. If you have any questions on this data, please head over to SpotGamma.com. If you hit subscribe now, you can get a free 7-day trial of our service, and you can watch exactly how we process all the movements in the options market over this pivotal week.